I want to start with AI broadly because it's what everyone's talking about. But you have this thesis that in terms of earnings revisions or something tangible, that all the investment's worth it, that shows up in hardware names. I don't see too many hardware names that you're holding. Explain that to me.
Yeah, so our focus has really been historically on software and internet companies. That's primarily where kind of our sources of differentiation have been, just in terms of our own research and experience. We've owned some hardware over time, but one of the things that we've found difficult is just with the predictability of this early AI investment wave. And so we're looking for really durable beneficiaries of AI. And so we think we've found many in both the infrastructure and application layers. And so while it's been unfortunate to miss, say, NVIDIA, we think it's very difficult to predict just how their fundamentals play out over the next couple of years. And so we're happy with our strategy and focusing on what we know best.
And Gail, one company that you invested in that you're long is Rivian. Now, this is a stock that's been under pressure, down 42% so far this year. You think over 2 years the stock could hit $50 a share. It's currently trading around $13. Explain to us your bullishness on this company and how much of it is riding on this deal with Volkswagen.
Yeah, so great question. So I've noticed a lot of the conversation this morning has been about Elon and EVs and Tesla specifically. I think the market has really started to look at Tesla as kind of the only real winner in EVs in this country. There are some big Chinese companies like BYD that are successful as well. But we've really kind of tainted any other secondary players in EVs into this, dustbin of unlikely, kind of unviable companies. And we think Rivian is emerging into its promise as being the #2 EV player after Tesla in the West. And so this deal that they just announced with Volkswagen about 6 weeks ago, we think is a massive validation of their position. Volkswagen is investing an aggregate of about $5 billion that will flow to Rivian. Rivian's only a $15 billion market cap today. Compare that with Tesla at $7 or almost $800 billion. And, Ed, just being here in San Francisco, we see a lot of Rivians out on the streets. It's very reminiscent of when Tesla started to get traction with the Model S. Rivian's roadmap is very much following in Tesla's footsteps, going from selling $100,000 kind of high-priced cars to a mass market. And the R2 and R3 models, which Rivian announced are going to come in 2026.
I'm just going to jump in here. So, as you know, I covered Rivian really closely for a few years. The VW deal was big. I've written that RJ Scaringer's has been a so to speak unreliable boyfriend. The Mercedes deal didn't last long. Ford never materialized. But it indicates that Rivian can't do it on its own. Is that fair?
So I actually think it's slightly different. I think the view that we have is that the legacy car industry is really struggling with the transition to modernizing their vehicle production. And so there are a couple aspects to that. One is the legacy car companies are really good at a couple things. They're good at outsourcing and they're good at marketing. They're not good at vertical integration and they're not good at software. And so if you look at even Ford's last earnings call, one of the things that their CEO called out is that Tesla and Rivian, those are the two companies that he called out, are really the only two companies that have developed a kind of new technology infrastructure that really modernizes the experience for customers. One of the important things now as a customer is, and I have both, I've had a Tesla for a long time, you expect to get over-the-air updates to your car. You expect to be able to access your car through your mobile phone. And those over-the-air updates are not just to the user interface. They're to the suspension system, the braking system, which requires a lot more integration. So we think the Volkswagen deal is like a real turning point for the industry in that Volkswagen, which owns Audi, Porsche, Volkswagen, Lamborghini, they want to infuse all of those platforms with Rivian technology. And so it opens up this new paradigm in the automotive industry where you see that the legacy OEMs might need Rivian as a supplier of technology and software, which is a new angle to this story.
And given, the developments that we've seen, it's still been a pretty volatile stock. How do you hedge against that volatility in your portfolio?
Yeah, so we've used the volatility to our advantage. So the company, if you remember, came public in 2021. It was one of the biggest IPOs in history. I think came out at a $100 billion valuation because people perceived that it could be the next Tesla. Several years later, that promise, the roadmap is starting to come into view. Obviously, that was very early for people to think that far out. But we've used that downside volatility to our advantage. So we've just purchased the stock in the last 6 months at around these levels. And so we're very happy taking a position in Rivian, using the downside price action to our advantage to be long-term investors to see what this company can become.
What's interesting, one of your other key holdings is also, well, impacted by Tesla in many ways, and that's Uber. That was the robo-taxi read across. I'm really interested in your ethos and focus on Uber and why you're so committed to the name.
Yeah, so it's a great question. This year, in spite of Uber putting up tremendous fundamentals, one of the big overhangs on the stock has been Elon's commentary and plans around robo-taxis. So this has been a big debate in the stock market, and we actually think, we're very convicted, in fact, that AVs, autonomous vehicles, actually will go through Uber's platform, not around Uber's platform, meaning that today the biggest player in AVs is actually Waymo, and Waymo is partnering with Uber in Phoenix, and we are anticipating potentially expansion of that agreement. Because if you think about Waymo going direct to consumers on its own through its own app, it doesn't have nearly the exposure or distribution that they get through Uber. And so to better utilize their fixed capacity of cars, they are partnering with Uber to generate better utilization. We think that that is a very important understanding to really understanding how AV companies that have autonomous functionality will leverage Uber's distribution to achieve better economics. Now, with robo-taxis, one of the big knocks that we have is, again, as a Tesla owner, the dream that I can push a button and let my car drive around and generate revenue for me sounds great, and we love Elon's long-term visions. But we also think that it's a bit naive and that the number of customers that are likely to push that button and let their cars drive around with strangers in the back seat, there are just a lot of real-world kind of considerations that we think make it still very far from happening.
The real-world driver is, of course, artificial intelligence as well, Gil. I go back to that as a driving force of what names you get in and get out of. Because where are we undervaluing the impact of artificial intelligence in certain applications and names?
Yeah, so, we own many companies. So, Ed pointed out that we don't do a lot of hardware, but we own a lot of companies that we expect to benefit significantly from AI. Obviously in the automotive space, AI, we really talk about autonomous driving, and that's why it's important for us to have a view on Uber and whether AI is a benefit or a hindrance over time. But there are a lot of names that we own in the infrastructure space, really in cloud infrastructure like Amazon and Microsoft, names that are known to everybody, but also Datadog in the software space, which is a little bit of a tie-on to companies that are investing in their cloud infrastructure. We also own a company that you wouldn't really think of as an AI beneficiary, which is Roblox, which I saw Bloomberg Intelligence actually put out a piece this morning talking about how Roblox is embracing AI to help their developers build games and experiences on the platform. So there are a lot of companies that are in the market, both enterprise and consumer-facing. We just want to make sure that we're with management teams and companies that are on the front foot, that are looking to embrace AI in all of the different potential ways that they can.